Well, good afternoon, everyone, and thank you for being here for our final session of our three-part USDA Livestock Mandatory Reporting webinar series focusing on swine and pork reports. My name is Jody Pitcock, and I'm here with the USDA Agriculture Marketing Service Livestock and Poultry Programs, and will be your host this afternoon. For those of you joining us for the first time today, this webinar is a continuation of a three-part series in which we at USDA AMS collaborated with industry and academia to provide information about livestock mandatory reporting and other useful resources USDA makes available to the pork industry. Today, we'll take a close look at the LMR wholesale pork reports, how the data is collected and aggregated, how the information is used for CME Group's Pork Cutout contract. We will also hear from experts in the industry on how wholesale pork reports are used to mitigate risk as well as for economic analysis and forecasting. I do want to say that these industry professionals, these folks have agreed to share some behind the scenes look at how they use the data. That said, I need to emphasize that no information provided by our presenters today or in previous series is intended to be used for legal, tax, or accounting advice or investment recommendations. It is for informational purposes only. This afternoon's webinar is being recorded and will be available on the USDA website within the coming weeks. We'll provide you a link to that website at the end of our session, and participants will also receive a follow-up email with that information as well. As participants, you are in listen-only mode, but you will have the opportunity to ask your questions at the end of each presentation. And then at the conclusion of our session today, we'll have a final live Q&A section. If you'll use the Q&A icon located on the bottom toolbar to submit your questions, it would greatly appreciate it. We'll estimate our series this afternoon to last about an hour and a half, and our speakers will answer as many questions as possible as time allows. Before we hear from today's first speaker, however, if you've been paying attention, if you've been attending the last webinars, I would like to try a poll question to see how many of you were paying attention to the information that we provided in last week's webinar. So the poll question is, which purchase type is described? A purchase of swine by a packer that is not a negotiated purchase, swine or pork market formula purchase, or other market formula purchase, and does not involve packer-owned swine. So make your selection, either other market arrangements, other purchase arrangements, negotiated formulas, or packer sold. All right, looks like we're getting some pretty good attendance there. And the results, other purchase arrangement, correct. If you chose number 2, you are correct. Good job, you were listening. So an example of an other purchase arrangement would be any swine purchased with a non-carcass merit premium. All right, well, that was fun. We kind of get it started, get everybody's brain working. Now pay attention, we'll get ready to roll with our first speaker. Our first speaker today is Miss Dylan Hall. She serves as the supervisory market reporter with the Livestock, Poultry, and Grain Market News Office in Des Moines, Iowa. She oversees livestock mandatory reporting of the wholesale pork, along with a few other voluntary reports. Dylan has been with Market News for nearly 6 years. Prior to her current position, Dylan was a market reporter working on cattle, international grain, bioenergy, local, regional. She's done a lot in her short time with USDA. Dylan holds a BS in Agriculture Science from Truman State University and a Master's of Science in Agriculture Education from the University of Missouri. Please welcome Dylan Hall.
Thank you, Jody, for the introduction. And thank you all for joining us for the LMR Hog and Pork webinar series. I will be giving you all an overview of USDA's LMR wholesale pork reporting. First, let's review AMS's role in wholesale pork reporting. AMS administers the Livestock Mandatory Reporting Act of 1999 and its regulations. However, while hogs started reporting under LMR in 2001, wholesale pork reporting did not begin until 2013. Within LMR, there are 4 daily and 12 weekly LMR reports. To ensure reports are accurate, we have an auditing team to review transactions and address any issues that they find. And lastly, as Lakeisha mentioned in the first webinar of the series, confidentiality is at the forefront using the 370-20 rule. Now you may be wondering, who submits wholesale pork data to AMS? This is federally inspected plants that slaughter or process an average of 100,000 barrows and gilts or 200,000 head of sows and boars on an annual basis. There are currently 55 plants submitting hog and pork data, which is capturing about 96% of the industry. What wholesale pork items are submitted? Wholesale pork is defined as fresh and frozen primals, subprimals, cuts fabricated from subprimals, pork trimmings, pork for processing, and variety meats. This, however, does exclude portion control cuts, cuts flavored above and beyond normal added ingredients that are used to enhance products, cured, smoked, cooked, and tray packed items. When and how do firms submit sales? Wholesale pork data is submitted at 10 a.m. and 2 p.m. Central every weekday. Companies are able to submit their data to us electronically into our secure system, which allows us to upload and review the data. Reports are released 1 hour after the data is submitted. What does each submission include? So each line of data includes the following information: destination, which can be domestic, export overseas, or NAFTA, which would be a Mexico or Canada destination. Sales type. There are 3 sales types for wholesale pork. The first being negotiated, which is where the price is determined by buyer-seller interaction and agreement. It is scheduled for delivery no later than 14 days for boxed product and 10 days for combo product after the agreement date, with the day after the agreement considered day 1 for reporting purposes. The second sales type is a forward sale. This is an agreement for the sale of pork where the delivery period is beyond the time frame of a negotiated sale, and the price is also determined by buyer-seller interaction and agreement. The third sales type is a formula sale. This is an agreement for the sale of pork where the price is established in reference to publicly available quoted prices. Next, we have delivery period. There are several options for delivery periods, such as 0 to 14 days for boxed product, 0 to 10 days for combo product, 15 to 60 days for boxed product, 11 to 60 for combo, and 61 days and up for both boxed and combo product. Refrigeration. This includes whether the product is fresh or frozen. Class code. The class code can be barrow and gilt, sow, boar, or mixed product. The product code. This is a unique code established by each company for their products. The total weight, which is reported in pounds. And then we have the FOB plant price and FOB Omaha price, which are both reported in dollars per hundredweight. So what is the reporter's role in all of this? Well, on average, we receive nearly 10,000 wholesale pork records each day. So the reporters review the data and contact any plant personnel to verify orders as needed. Orders may need verification due to a high or low price, an odd weight, or maybe they just aren't with the current market that we're currently seeing. So we contact the plant personnel to verify that record. The reporters also work on a tight deadline, meaning they must review data, verify any orders with plant personnel, and publish data all within 1 hour. Now let's switch gears. We've reviewed some of the basics, so let's take a look at the daily reports. We have 4 daily pork reports. They are the National Daily Pork Report FOB Plant for negotiated sales, and the National Daily Pork Report FOB Omaha, also for negotiated sales. There are 2 release times. One is at 11 a.m. Central and 3 p.m. Central. So we have morning reports and then afternoon reports for both of those different report types. Here's an example of the National Daily Pork Report FOB Plant negotiated sales afternoon report. I will pull this up in PDF so we have a bigger view. So as I mentioned, this is the afternoon report, meaning that it contains data from 1:30 p.m. Central of the prior day to 1:30 p.m. Central of the current day. So sales within the previous 24-hour period. This report also contains sales with domestic or NAFTA destination. Some highlights of this report include, first, the load count, which is broken down into pork cuts, trimming and processed pork, and a total. This is highlighted in yellow. One load is equal to 40,000 pounds. Next, the carcass cutout value and its change from the previous day, which is highlighted in blue. And then we have primal values and their change from the previous day for the loin, butt, picnic, rib, ham, and belly primals, which are all highlighted in green. And then in the pink section, you can see the load count, carcass cutout value, and the primal values for the previous 4 days, along with the 5-day average. As you scroll down the report, you will see the different primal sections and subprimal cut lines. So here, as we can see highlighted in purple, we're in the loin section, and each cut line shows the pounds, the price range, and the weighted average price. And as you continue to scroll, you'll go through the different primal sections. So the next one that you see here is the butt primal, which has the cut lines for those subprimals. The National Daily Pork Report FOB Omaha negotiated sales afternoon report, along with the 2 morning reports, contain the same attributes very similar to this report that you see here. And one question that might come to mind is, what is the difference between the morning and afternoon reports? The morning reports contain data from 1:30 p.m. Central of the prior day through 9:30 a.m. Central of the current day. The morning reports are viewed as preliminary, as the data from the morning reports is also included on the afternoon reports. So what is the cutout value? The pork carcass cutout value is an estimated value of a standardized pork carcass based upon industry average cut yields and average market prices of subprimal pork cuts. Packaging, fabrication, and labor costs are all deducted from the cutout value. Fabrication yields are voluntarily provided to USDA by packers who are required to report under LMR. A survey is sent out each May, and once the information is received, we use the industry average cut yields for the upcoming year. The new yields become effective on the first Monday in January. There are only 8 reports that contain carcass cutout and primal values. These include the National Daily Pork Reports for FOB Plant and FOB Omaha negotiated sales, along with the National Weekly Pork Report, FOB Plant and FOB Omaha for negotiated sales, and finally, the National Weekly Pork Report, FOB Plant and FOB Omaha Comprehensive Report. So now let's talk about the factors that impact the daily and weekly negotiated pork carcass cutout calculation. So we talked about attributes that were submitted with each data submission earlier. So which ones of those impact the pork carcass cutout on the negotiated report? So the destination must be domestic or NAFTA. The sales type must be negotiated. The delivery period must be 0 to 14 days for boxed product and 0 to 10 days for combo product. Refrigeration must be fresh product only, so it should have a 0 to 10 days for boxed or 0 to 6 for combo. And lastly, the class. The product is only from Barrows and Gilts, so it must read Barrows and Gilts in that classification. Now we will move on to a poll question. Of the 6 primal values, which one has the highest yield to the carcass? If you answered loin, you are correct. Its yield is 25.32% and thus is one of the primal values with the large impact on the carcass cutout value. Here is a list of our weekly pork reports. All of these are released on Monday, with the exception of the weekly negotiated sales reports, which are released on Friday. We have a comprehensive report, negotiated sales report, formula sales, forward sales, export sales, and specialty. And as mentioned, these are also both available in FOB Plant and FOB Omaha. Here is a look at the National Weekly Pork Report FOB Plant Comprehensive Report. And once again, let me pull that up in PDF for a bigger view. This is released on the first reporting day of the week, so generally Monday unless there is a holiday, and this contains data Monday through Friday for the prior week. This report includes all destinations, all sales types, all delivery periods, all refrigeration types, and all packaging types. However, it does not include any specialty items. As you can see, this report has carcass cutout and primal value information. Fresh and frozen items are used in this carcass cutout and primal value calculation methodology. Some of the key components are the carcass value and change from the previous week, which you will see highlighted in blue. Primal values and change from the previous week, highlighted in green. The total load count and volume for each primal, which you can see in the yellow, and then also the yellow sections highlighted current volume. And then if we scroll down from here, we do have a section for sow and boar information, which is in this purple highlighted section, which gives a total load count for sow, boar, and mixed product. Lastly, I would like to point you all to our reference room, and I will show you all how to get there as well. This is the home page of our website. So if you go to that and then navigate to reference room right here, and then as you scroll down, there are 2 user's guides that are relevant to pork. So we have a user's guide to USDA's Pork Carcass Cutout, and also a user's guide to USDA's LMR pork reports. These are going to contain the most up-to-date information, and the one for the pork carcass cutout will always contain the most up-to-date yield information. So if you have any questions about what yields we are using, you can always find those there, and they're a resource to you.
All right, Dylan. Well, thank you. Thank you very much for that presentation. You know, on our website, we have a lot of information for our producers to use and our stakeholders out there. And so I appreciate you taking your time to walk through those reports and where to find them and how to utilize them. There was a question that come in through the Q&A that asked, there's 55 plants or something that are required to report sales. Is there a place where it shows where those plants are located?
Thanks, Jody. No, we don't share those or publish that information due to confidentiality, as we want to make sure that we're protecting the entities that are providing that data to us.
Yes, okay. Yeah, confidentiality is very, very important through LMR. Very, very well laid out through the act on how confidentiality is supposed to be handled. So appreciate you addressing that question to the public. We had another question that come in. You talked about the NAFTA products. Can you tell about what about how is export items reported?
Yes, so export items, they would have a destination of export overseas, and then they would go on the export report, which you may know as the 640 and 641 reports, as well as included on the comprehensive, which would be the 680 and 681 reports.
Okay, okay. We have one more question, then we're going to move on to our next speaker. And this one I want to address because I think it's very, very important that our stakeholders have an understanding. But the question is, is there a way to get an email notification when a report is released? And Dylan, if you want me to, I can go ahead and address that. Or if you want to address it, I'll hand it off to you.
I can go ahead and address that.
Okay.
Yes, so recently we have moved to what we refer to as My Market News. And through that, you are able to subscribe to certain reports that interest you. And then whenever a new one is released, you will get that notification in your email.
Okay,
And
good
then
deal.
Jody, sorry if you had anything else to add to that, but My Market News would be the best way to do that.
Yeah, absolutely. That's where I was going to send them, was My Market News, and you can that feature that we offer to our stakeholders is great. You can sign up for email notifications. You can download data. You can build APIs and automatically download data. And if you need some help with that, please reach out to one of the Market News team, and they would be more than glad to assist you in walking through the My Market News platform. So Dylan, we sure appreciate your time today. Thank you for joining us, and we look forward to some more questions here later on in this session.
Thanks, Jody.
All right. So now I'd like to introduce our second speaker this afternoon. Joining us again today from the CME Group is Ann Crema. Ann currently serves as Director of the Research and Products Development at CME Group, maintaining the current livestock and dairy products offerings, as well as researching potential new products. Since joining CME Group, Ann has worked closely with commercial market participants in the agriculture space to ensure that the exchange continues to serve as an effective venue for risk management for the hedging community. Ann was one of our speakers last week and touched on the live hog contract. So I look forward to hearing what Ann has to say today on the Pork Carcass Cutout contract. By the way, Ann grew up in western suburbs of Chicago and studied economics and statistics at the University of Michigan. So please join Ann Crema with the CME Group.
Hi, thanks so much, Jody, for the introduction and for having me back a second week in a row. I'm Ann Crema. I'm the Director of Research and Product Development at CME Group. I oversee research and product development for our livestock and dairy offering here at CME Group. And today I'm going to be talking about specifically our CME Pork Cutout futures and options, as well as our CME Pork Cutout index. Again, we really appreciate the attention 2 weeks in a row, and we appreciate the interest in our pork offering at CME. And with that, let's get into the presentation. Just to stress today, anything that I say here is neither investment advice nor recommendation. So a few of the topics I'm going to touch on today might be a bit repetitive from last week, and I apologize for that if you joined us for the Lean Hog seminar as well, but I just wanted to make sure to touch on some of the foundations for the exchange existing in the first place. So here at CME Group, we offer a wide range of risk management tools, and this spans across all asset classes, including agricultural products, energy, metals, interest rates, foreign currencies, and even weather. And across all of these asset classes, we see a wide range of activity And every day, market participants are coming here to manage their price risk across every product that we just mentioned. So our average daily volume across all of those products is about 19 million contracts. And within that, our agricultural product average daily volume is about 1.4 million contracts. Our livestock offering, which includes lean hogs, pork cutout, feeder cattle, and live cattle, makes up about 138,000 of that average daily volume. And I would just like to stress again that CME Group really exists in the first place as a result of the agricultural market. Going back as late as the 1860s for the Board of Trade, physical market participants needed a place to come and manage their price risk. They needed to protect themselves against adverse movements in the cash markets. The trading on the futures side is either the buying or the selling of a contractual obligation calling for future delivery of a specified commodity, or for cash payment in lieu of that physical delivery. Options on futures are contracts that represent the right, not the obligation, to either buy or sell a particular underlying futures contract at a specified price on or before a specified date. And here at CME Group, we offer various products across the agricultural complex. This includes livestock, dairy, grains and oilseeds, fertilizer, and lumber and soft. And while last week we focused on our lean hog offering, today we're going to dive into our CME Pork Cutout offering. The CME Group has been home to futures contracts for all things swine since the 1960s. Initially, frozen pork belly futures were listed in 1961 and traded for 50 years. While last week I spoke about our CME hog offering over time and the transition of CME live hog futures to CME lean hog cash settled futures in 1997, today I'm going to speak more recently about our launch of CME Pork Cutout futures and options and our CME Pork Cutout index. So at CME Group, we strive to make sure that we're offering the best price risk management tools to the physical marketplace. Within my division, this means we need to be listening to the industry, and this could mean taking into account changes to physical product specifications or to shifting pricing dynamics within the industry. Now, we know that over time, an increasing number of contracts between producers and packers have been referencing the pork cutout value. As a result, there's a need that has emerged within the industry for additional price risk management tools. While the CME Lean Hog Index reflects the prices paid for hogs in the U.S., the CME Pork Cutout Index reflects the prices paid for wholesale pork. A cutout is the approximate value of the hog calculated using the prices paid for the wholesale cuts of pork. Various factors in the market can drive volatility in the spread between lean hogs and pork cutout. And this variability in the spread, especially that we've seen over recent years, has led to further difficulty in managing price risk tied to the cutout using the existing tools. As a result, CME decided to launch the CME Pork Cutout futures and options. Ultimately, these new tools can be used for producers, packers, processors, wholesalers, importers, and exporters to tailor their own risk management strategies. It can be used for a producer to more effectively hedge their exposure based on their contracts, whether they're tied to cutout or lean hogs. And it can also allow for firms further down the supply chain to more effectively manage their cutout price risk. Additionally, this presents the opportunity to trade the spread between pork cutout and lean hog. Our CME Pork Cutout futures are very similar to our CME Lean Hog futures in terms of contract specifications. This was done intentionally so that market participants could easily trade the spread between lean hogs and pork cutout. Pork cutout futures are a 40,000-pound contract. They also trade in U.S. cents per pound. Trading is available on our Globex marketplace from 8:30 a.m. to 1:05 p.m. Central Time every weekday. And our CME Pork Cutout futures are cash settled as well, and they will settle against our CME Pork Cutout Index, which we are going to get into more later on in the presentation. We ultimately launched our CME Pork Cutout futures and options on November 9th, 2020. Since we launched, we have traded over 29,000 contracts across futures and options. This equates to over 1.1 billion pounds traded. We have continued to see new market participants enter the space, and these new entrants are representative across the entire supply chain. Our average daily volume for 2021 is 127 contracts, while our average open interest for 2021 is 1,481 contracts. We know very well at the exchange that it can be extremely difficult to get a new futures contract off the ground. It has been encouraging for us to see the support of the physical market participants so early on, and we greatly appreciate the interest in the industry and continuing to see this contract grow. Now I want to dive a bit more into the CME Pork Cutout Index and how we ultimately calculate the price on a daily basis. CME began publishing the CME Pork Cutout Index in August of 2015. We use data from the USDA National Daily Pork Report FOB Plant Negotiated Sales Afternoon Report, the LMPK 602. We will pull in both the daily number of loads and the daily carcass price to determine the daily total value. And the Pork Cutout Index is a 5-day moving weighted average price. We calculate the index every business day, and it is on a 1 business day lag. Here's an example of the LMPK 602 report and the data points that we're pulling in. We're pulling in the loads as well as the carcass price from that PK 602. And now to walk through an example of how we calculate the Pork Cutout Index on a daily basis. The index calculation begins by multiplying the daily number of loads by the daily carcass price to give us the daily total value. The same process is used with data for the previous 4 business days as well. To determine the CME Pork Cutout Index value, the sum of the 5 consecutive daily total values is divided by the sum of the 5 consecutive daily total load count. The result is a 5 business day weighted average of pork carcass values quoted in cents per pound or dollars per hundredweight. If you are not receiving our commodity index prices today, you can visit our website under our market data reports to view our pork cutout prices or our lean hog prices or fresh bacon prices. Here we see the CME Pork Cutout Index going back to 2015. As you can see again, there are quite a few swings in the market and quite a bit of volatility. As such, we are pleased that we are now offering our pork cutout futures and options for market participants to manage this physical price risk. And now I wanted to highlight here our final settlement dates for pork cutout futures. Now we did recently have a final settlement for our October contract, and our next will be on December 15th. So if you are not yet trading either pork cutout futures or are managing any of your price risks using futures and options, I wanted to highlight a few resources here. We definitely encourage market participants just getting started to reach out to a broker. Brokers are excellent resources in managing and helping figure out how to manage your physical price risk based on your individual risk profiles. We do have a directory on our website called Find a Broker, which you can filter by both market participant type as well as asset class. Additionally, you can find all resources related to our pork cutout futures and options on our landing page. I know we've gone through a lot of information today, so I wanted to make sure to follow up with my contact information in case there are any additional questions or if anyone would like to have a deeper dive, whether it relates to our pork cutout offering, our lean hog contracts, or any other matters related to the exchange. Thank you again, Jody and the USDA, for hosting this event and for giving us the opportunity to speak. We also greatly appreciate the interest in both our CME Pork Cutout offering as well as our CME Lean Hog offering. We're very happy to have any further conversations as you have additional questions on our futures and options offering or how we calculate our commodity indexes. Please don't hesitate to reach out to us, and thank you very much, everyone, for your attention today.
Well, Ann, thank you again. I really appreciate you taking the time to go through that and joining us again this week. It's been a pleasure to work with you throughout this series. And I did have one question, or we did have one question that come in, and I think we would like to address it at this time. If I was looking at trading both the lean hog and pork cutout contracts, are there any capital efficiencies in trading both of those commodities?
Yeah, thank you for the question, Jody. And it does build off last week. We had a question on margin. So
If you, based on your own risk profile, have a need to trade either lean hogs or pork cutout or both, there is actually a 35% margin credit if you were trading both of those two contracts. So, if you were trading one outright contract of lean hogs and one of pork cutout, you would have a 35% a 35% discount in your overall margin requirements across those two contracts.
Okay. Good deal. Well, I'm glad you addressed that. I didn't know that about that. So that was good information to share with our attendees. One other question before we go to our third speaker today. I know that on the CME website, there's a lot of educational material. Can you kind of speak to that a little bit to give attendees, kind of where they can go to learn more about these contracts?
Sure. Yeah, there's a wealth of information on our website. So, we do have an agricultural product landing page, and within that, you'll be able to kind of toggle between the different products. So we have a pork cutout landing page, as I mentioned. We also have a lean hog landing page. And then really from there, there's individual links with white papers tailored to specific products. So we have some more recent white papers specific to pork cutout around cross-hedging of wholesale pork products, for example. We also have one about trading the spread between lean hogs and pork cutout. So if you start with our agricultural landing page, and then kind of you can work your way through whether it's pork cutout or lean hogs, you can get to those resources. We also have a more specific educational, venue for that includes sort of modules, I guess we'd call them. So an intro to hedging livestock products using futures and options, a little bit less tailored to the specific products we're talking about, but there's a lot of foundational educational materials as well. And beyond that, again, we're happy to jump on a call anytime to talk about the products, how to get started, how you can access our market. So I'm definitely happy to answer any questions, but there is a lot on our website. So I appreciate you bringing that up, Jody. Thank you.
Yeah, so it's, I've used it several times myself. I go to it and refer to that information often. So really appreciate you speaking on that. And we sure appreciate you joining us again. Want to apologize. We had a little bit of a camera issue there. For some reason, your camera wasn't coming on when you first turned it on, but it's on now. So we apologize for that. But we sure appreciate CME's involvement in these educational webinars. It really shows just how big and how we all kind of work together for the good of the whole industry. So please tell everybody there at CME, we really appreciate your help and your involvement.
Will do. And I mentioned, Jody, we wouldn't be able to launch these contracts in the first place if it wasn't for the data coming from USDA. So, it's critical that we have that partnership, and we really appreciate all the work that you guys do as well.
Good deal. Well, thank you, Ann. All right. Well, we sure appreciate that. And we'll move on to our third speaker this afternoon. Today's third speaker is John Nalifka. He's the president and owner of Sterling Marketing, an agriculture economic research and advisory firm located in Bell, Oregon. He earned a BS degree in animal science from the University of Idaho and the Master's of Science degree from Agriculture and Resource Economics from the University of Nevada in Reno. John has been analyzing micro and macroeconomic aspects of livestock and red meat industry for over 37 years. He began his career as an agricultural economist with the ERS service of USDA in Washington, D.C., with primary responsibility for beef industry economics. He was also director of research at the CME Group, a leading food industry consultant firm in Lenexa, Kansas. He joined Sterling Marketing in 1991 as an executive VP and partner, and then purchased the firm in 1994. Sterling Marketing serves clients across the red meat supply chain, including beef and pork packers, processors, national chain restaurants, banks, private equity firms, and brokerage houses. The firm's client list include many who have used their services for over 20 years. John, we really look forward to hearing what you have to say today. Thank you for joining us.
Thank you, Jody, and I appreciate the opportunity to present some of the little bit of the information and how I use, USDA reports and the business that I have. So just to kind of start through, if we look at the main pieces of kind of the the USDA price reporting and how that fits into the services for my, we go through the, most of the pork cut price forecasts. And I guess I would say that, you have to kind of sort out the information, because when you look and as you look at the USDA website, and, again, I've looked at this, reporting data for a lot of years, and, there's a lot of information there, and you have to kind of, just make a determination. What do I need to look at? What can I use, and what will help me in making the decisions that I'm managing, risk to my business. So there's I look at, a good deal of the individual cut price forecasts. The pork cutout is a key part of the what I track, and those and develop, pricing strategies to manage procurement price risk for clients, across the supply chain, which includes, chain restaurants and fast food restaurants, food distribution, packers and processors. And then another key part of the information that I develop for clients are industry margins for both, fair to finish, producers and packers. I think as we look and carry that over to, risk management, the price reporting must be accurate, it must be timely, it must be transparent, and it must be accessible. And I would, say that the USDA price reporting definitely meets all four of those, criteria, and more so even since they've gone to the mandatory price reporting.
Hey, John, I was going to ask you real
So
quick. John, I didn't want to interrupt you. But one of the participants asked, did you have a slide presentation that you was going through?
Oh,
Because it wasn't showing.
oh, okay.
So if anyways,
It's not.
Just
Okay.
wanted.
It is. Oh, I'm sorry. Gee whiz.
No, it's all right. No,
Okay.
they asked. So I thought, well, before we got too far down the road, I thought I'd better ask you. So.
Yeah, I did not do my share screen. I apologize.
No, that's okay. All right. Well, I'll go ahead and mute myself so we can go ahead, and there you go. We can see it now. Thank you.
Let me go back. Okay. I don't need to go through it. I'm glad somebody brought that up. So as I look as an example of some of the data and how I use it, then I'll just use the primal value, because that's one item that is key as we look at bacon markets, and it's used in a lot of the formulation of the procurement contracts and how the pricing is developed. So if we take the primal value and just look at the data on a weekly basis, there's, you look at that and you think, that's kind of a mess. And how would I sort that out in terms of, forecasting or developing, future pricing and going forward? Well, one thing that I do is I take that data and I put that into the, concept of a, product ratio. And I take that belly primal value against the lean carcass value. So this, not to make a big, statistical deal here, but as you look at these kind of charts, and you can kind of see where the low of the market is or that ratio is in May, and then as that value, increases, and you can start to look at how you might, use that in terms of forecasting. And I do use the product ratios as one of the keys to, forecasting prices forward. But if you take then the value and you start to put that into context of what's termed a coefficient of variation, then, and that's another statistical term. I don't want to get in the weeds on this, but just looking at the picture, if that value is smaller, then you can put more confidence in the predictability. Again, the thing I'm trying to point out in this presentation is that it requires, quality information, to be able to take that price data every day and use that, in forecasting and predicting prices and making those recommendations in terms of forward pricing. So the chart would tell you, taking all that price data with lines going everywhere, there's about 75% of this chart that you don't have nearly as much confidence in using that data. But as you get towards the end, and this is not this doesn't say that the data isn't good. What it says is that belly prices are, can be all over the place, very volatile, and it can be you look at those prices and you may think, well, there's very little volatility till you get towards the end of the year. So if we look at another on the loins, which was pointed out on the, on Dylan's, presentation, or on the poll question, the loins represent the largest share of the carcass. So, and if you look at the pricing, and again, look at that coefficient of variation around those, using that ratio, that product ratio, well, you can have a lot more confidence. Again, it's not the quality of the price reporting, it's the volatility in the prices, in loin prices. They're a lot less volatile. So consequently, you can have more confidence as you look at these ratios and using that as a tool for forecasting forward. Another thing I do is in taking my database, I look at the distribution of prices. So if we look at the belly prices, and there's been times, and we're in one of those times right now, we're out towards the right-hand side of this chart. The normal distribution of belly prices is around that, roughly around that $1.20 to $1.30 area on the primal value. Well, we're well beyond that right now, but as you look at the data, it would suggest that we would come back and normalize back towards an area that we can see on this chart, which is once again around that $1.30 area range for the primal value. So price analysis using AMS reported is basically, there's I use it to forecast supply, and not the price reporting as such, but the slaughter and the production, forecasting the lean carcass value, forecasting cuts, and then I build a cutout value from the cut prices. I take my lean carcass value and put that into my margin estimate, into my margin model for calculating the producer margin. But I pull the cutout value that I generate from those price forecasts into a packer margin, and then I look at the two together to evaluate my price projections, and then go back and work through that that system once again. I'm a firm believer that industry margins are extremely important, because basically we all operate in a system of, if we're making money or losing money, we measure accordingly. So if we look at the pork cutout value, on a weekly basis, over the last, looking at a 5-year average, and then the last, 2019, 20, and then this year, you see there is some predictability and seasonality into that cutout value, obviously, and it's a supply demand situation. We look at the lean carcass value, the same situation. We've seen the lean carcass value drop significantly over the last, 3 or 4 weeks. But we can see where we were as high as we were in 2014 when we had PED and prices went to record levels. We reached that same point, this summer, and then they fall on. So if we look at the margins, just kind of gives a picture of the margins and where we've been. The situation is significantly different than it was last year, with the processing margins falling to the lowest level they've been since since 2015. And then the producer margins, you can see the I always look at producer margins as I look at the hogs and pig report, and making, developing expectations going forward in terms of expansion or explaining what producers were indicating in the survey. And certainly, that there was indications, or I think there was that feeling after last year, the producers were looking at where they they were uncertain about where margins would go. They'd seen really good margins this summer, and they didn't want to have another problem like last year. So I think that it's good to using that USDA data, developing forecasts, developing margins is really a key to the providing the information that I do to clients. I think that the AMS's mandatory price reporting provides a necessary and valuable service to firms such as Sterling Marketing, as we analyze and assess specific markets, provide risk management advice to our clients, and those clients includes packers, processors, chain restaurants, producers, and banks.
All right, John. Well, I sure appreciate you joining us today, and I really enjoyed looking at your charts. And one thing, when I was working on the pork desk, when I was a pork reporter years ago, and the belly market was really interesting to watch, and you could see, that very seasonal at times, especially come around the end of summer when tomatoes are getting ripe and et cetera, et cetera. But your chart kind of indicated some of that. One of the things that I want to ask is, with all that information that you have available, how do you decide which prices you're going to track, and then what platform do you use or model to keep track of that information?
Well, what I do, Jody, I pull it into I pull the weekly price reporting into a weekly database. And then from the weekly database, I create a monthly database. So basically, I certainly don't want to get down to a daily database, but I think the weekly provides a good, and then I've got within that database, I've got, I've kind of set it up to look at, different, on that data, each one of the prices. And one thing that's kind of that I like to look at is if you take and I'll just use the bellies for example, again, if you look at the belly price, and what is its contribution to the overall cut, and that's, and if something changes significantly, then it gives you an idea that the market is changing, and you go forward from there. But again, I would certainly emphasize that there's you guys at USDA, USDA puts out a lot of price information and a lot of reports, and it's And I think they're confusing if, you know, that as people look at that information, look at that data and look at the reports that are put out by USDA, you certainly have to, you know, make a decision and not try and take it all in or try or database or accumulate all that data. You have to pick the pieces that will work to help you make decisions.
Yeah, there is a lot of information there. I agree. So, you know, when you're going through this and you're sorting it, is there any specific software, computer software that you use? You know, like Excel? I mean, what is there? Is there any software that you use that would maybe help a producer out there so that they can keep all this information straight?
Uh, I'm a big user of Excel and you know, I think I've always thought, you know, you have to use, if you can use software that you don't get too many things going at once again. Otherwise, you know, I think it gets discouraging to people. And I think where I pull the prices, I build my database in Excel, and then I can pull those prices from the database into my forecasting directly and link the two together. I think the more pieces of software that you have to go through, or the more different, the more, you know, I think you just, if it gets too cumbersome, then it overwhelms you, and pretty soon you throw, you say, well, I got other things to do today. So, and it's my business, but I mean, so I've built my, you know, obviously my business rests on, you know, analyzing this data.
Mm-hmm.
If I
Right.
were or somebody working in a packer, you know, that's a different issue. You gotta have other things to do besides sit around and analyze markets.
Yeah. Yeah. Well, and that's the thing. There's, you know, companies out there like yourself you know, I know with the market news, MPR, their data mart, their my market news, you know, that allows stakeholders like yourself and others that if they want to download large volumes of data, they can do that. So I really appreciate you taking the time to address that specific question. One other question that I want to talk about before we move on to their fourth and final speaker, you know, when you were showing the charts of the cutout value, I know that, you know, every so often you'll have those years that are kind of outliers that, you know, 2021 could maybe be considered as or one of those. Um, as a market, you know, analyst, how do you handle those outlier years, you know, when you're talking to your clients? Do you omit them or do you use them otherwise?
Well, they certainly come into because in particular over the last 2 years, and you know, I may be talking to a client on a weekly call, and they'll say, well, you know, if I go back and look at history, and they'll bring it up to me, because they've seen, you know, they have access to all my data, and they'll say, well, so how do you think, so historically, the direction of this particular item, the price of this particular item has gone such and such, and you know, do you think that the market will turn and we'll come back to that same situation this year? And that's kind of, and then it creates the conversation, the discussion. And I've had clients tell me, and I think this is, you know, really, you know, true, and is that it's the conversation around those issues that creates a lot of the value. And, you know, you have to be able to talk it through and not just, I guess I've always said, it's not just the computer, what the computer spits out. There has to be the analysis and the conversation around that. And I think that's what, you know, people look at for, you know, for people like Steve and I that do what we do.
Okay, good deal. Well, John, I sure appreciate you taking the time. Appreciate you being willing to join us for this session and speak. And you come with a lot of years of knowledge, and so I think it's great that we have that opportunity and you was able and willing to share that with our attendees today. We'll bring you back here at the end for some final Q&A. So I sure appreciate your time today.
Thank you, Jody.
All right, so now let's move on to our final speaker. I guess you would call it the grand finale of our three-part series. We've invited Dr. Steve Meyer. Dr. Meyer joined Kern and Associate, the predecessor of Partners for Production Agriculture, in January of 2018, after serving as Vice President of Pork Analysis and EMI Analytics since May of 2015. Dr. Meyer's duties at Partners for Production Agriculture included ongoing analysis of hog and pork markets and assisting clients in using his insight to successfully manage their business. He brings a wealth of experience in the livestock industry. His range of work in the pork industry is unique. Prior to his time at EMI Analytics, Dr. Meyer was the president of Paragon Economics Incorporated, where he also monitored and analyzed cattle, beef, and poultry markets to meet the needs of his diverse set of clients. He served for 12 years as the author of the Daily Livestock Report, sponsored by CME Group, an e-newsletter whose circulation grew steadily following its introduction in 2003. In addition, he writes a featured article for the National Hog Farmers Weekly Preview e-letter that focuses on economic issues in North America swine and pork sectors. Prior to founding Paragon Economics, Dr. Meyer served as the Director of Economics for the National Pork Producers Council and the National Pork Board from 1993 to 2003. In that capacity, he provided economic counsels to the producers and NPPC and NPB staff and coordinated staff and consulting activities regarding meat industry production and price forecasting and the economic impact of pork production and processing. He also administered NPPC and NPB programs dealing with marketing and pricing systems, as well as industry structure, coordination, and competitiveness. Since leaving NPB staff, Dr. Meyer has served as the organizing consulting economist. Dr. Meyer, we sure welcome you to our today's session. We look forward to hearing from you. Please welcome Dr. Steve Meyer.
Thanks, everyone. It's good to be with you. It's an honor to have been invited to talk about mandatory price reporting. This has been an important thing in my career. I think, John has been doing this a little longer than I have, but I think I qualify here because I have more gray hair than all the others that they've asked. And Jody charged me with kind of a wrap up of NPR. We've heard a lot today about pork reporting and the importance of pork reporting, and I'll talk about that here in a minute too. But I'm going to kind of go back and talk about how this happened, some important steps along the way, and what it might mean for the future. I'm one of the few left in the business who was actually in the room when the law was crafted. And I'll tell you, it was a painful experience. Congress, the way that this went about, I will go to it here in a minute, but Congress decided they didn't want any part of writing it. And so we had to hammer it out through a series of conference calls in 1998 and 99 to get it done. And then it had to be attached to legislation that was moving otherwise through Congress because they didn't want to do this on its own. I've been NPPC's representative or consultant for all of the reauthorizations that have happened so far. So I've been kind of in this thing eyeball deep. And finally, I think they asked me because I've been very supportive of market news through this process. Now, I will point out that Mike Irwin and Jim Epstein and Mike Lynch and Jim Bernal and a lot of other USDA people might disagree that I've been so supportive. It doesn't mean that I've agreed all the time, but I've really almost always stood with USDA when we talk to producers and others about mandatory price reporting, about the design of the program, about its performance, about how it's been administered. I think they've done a marvelous job over the years. Again, we didn't always agree, but the professionalism of the USDA people in this thing just has been exceptional all the way through this, and it hasn't changed as the people have changed, and I don't think it's going to change now. So why do we have MPR, and what is its role? Well, I think the biggest reason we have mandatory price reporting is we saw the demise of public transactions for hogs during the 1980s, when the last of our terminal markets closed, and a lot of regional markets, country auctions closed as well. All of a sudden, all of these animals were moving direct, and we didn't know what the price was. And I think the big driver of this was the growth of producers. I mean, if you get to the point where you can put together a semi trailer load of hogs, there's not much sense in taking those suckers to a buying station and loading them onto another semi trailer. And so these transactions became direct, and because of that, we didn't see what was going on. We could not have directly observed the prices that were being paid in the marketplace. The 90s gave rise to a lot of skepticism and distrust in voluntary reporting, and structural change, and the growth of large producers and the rumored sweetheart deals of large producers were part of this. And we have to remember that voluntary is voluntary. Packers did not have to report, and they could report this day and not another day. And most producers did not really realize how much experience and judgment and expertise USDA brought to this process in taking voluntary reports from all over the country and reporting a market. And they were good at that. They knew when this one was really not representative and that one wasn't, and they could report the sense of the market very well. But I don't think producers appreciated that, because there were deals out there that they weren't getting reported because it was voluntary. And so we wanted mandatory. And then the crisis of the fall of 1998 was the final blow. And, the crowd with pitchforks and torches were screaming, "We want to know the prices that everyone receives." Now, when you do mandatory price reporting, you can't do that. I mean, USDA could not, the federal government could not say all of the prices they gathered if they forced you to give them the data. And so we had to be settled for weighted averages and ranges of prices. And then the ranges were way wider than anybody thought they were going to be. And so, the people said, "Well, we want to know the range of the price." And then they said, "Well, that can't be right." Well, it was right. USDA went back and audited it and made sure it was right. And so later we added price distributions, which showed within these ranges that the distribution of most of these prices was skewed to the high side. There were very few of those very low prices. So again, mandatory price reporting provided information that in many cases, mandatory price reporting has kind of put to bed boogeymen that producers and others in the industry thought were out there, and has kind of shown us what the truth is. Congress had very little to do with this act. And I would argue that's a really good thing, because can you imagine congressmen and senators trying to write livestock price reporting bill? I mean, they can't even do the things they're good at, much less this one. And so I think it was good that they didn't do it. What they did say was, the host has asked me to start my video, I see, so I'm going to give it a shot here. If you'll give me just a second and I can get my cursor to move. There we go. We'll try it. There we go. Okay, thank you. A long series of conference calls between packers, represented by the American Meat Institute, producers represented by MPPC, and market news personnel. And I mean, I don't know how many there were. There were, not 100 probably, but not 10, that's for sure. Neither AMI nor MPPC at the time trusted the political appointees at USDA. Mike Irwin and the guys that were in Des Moines at the time, we were fine with them. It was the guys above them that we were afraid had a real political agenda on this and would really change it. So we wrote a very prescriptive law, and maybe one of the most prescriptive that's ever been written. And, the term "tie their hands" was used many times on the producer side. And I know that wasn't ever popular with the market news folks. They would have liked a lot more wiggle room and a lot more leeway in writing the rules and those kinds of things. And in some cases, we look back on it and say, well, we probably shouldn't have tied their hands quite that tight, but we did. And it was a prescriptive one. And by and large, we got it pretty close to right. So it wasn't too bad, but it was a very prescriptive law. One of the keys to MPR has always been USDA's ability to go and audit data that has been submitted in the past. They can go and randomly audit data from the submitting packers and compare the data they had to use on that given day for that lot to the records that are in the packers records at their headquarters or wherever it might be. I think that's driven trust. Now, there are some folks that point, to my knowledge, USDA has never charged anyone or fined anyone for a violation of the reporting standards. And this thing was written really to kind of prevent that. If someone misreports data, it has to be a pattern of misreporting before it's a violation. Everyone realizes that folks make mistakes. And to my knowledge, every time USDA has found one of those, it has been fixed, and it's been fixed quickly. And so I don't think we've had an issue there. And so we never have done that. So anybody that thinks that having to find somebody shows that the law has been successful, I don't think that's the right criteria. I think having good information is the criteria, and we've certainly done that. So the last point I'll make is MPR was never been price discovery. A lot of folks say, well, this is price discovery. Well, it's not. Mandatory price reporting just reports the results of all the interactions between buyers and sellers of hogs and pork that constitute the discovery process. Okay, I think I was the one, maybe, I'm not real sure, who coined the term that MPR was a mirror on the marketplace. All MPR was intended to do was observe and reflect what was going on in the marketplace on a given day. And I think it's done admirably well on that over the years. A few tweaks along the way, no question, but still, it's really done very well in accomplishing that. So through the years, there's a few things that we've done and, that we've had to do, and some that we've chosen to do. And one of them was we started off with a 5-year sunset clause. We never intended for this thing to last 5 years and then go away, but we thought that, there's going to be changes that probably need a little bit of road marker, a little bit of mile marker along the road that says, okay, let's stop and look at what we need to do. And it's proven to be problematic a couple of times. The first time we went through reauthorization, the senator decided that they had screwed up some loads of cattle in southern Iowa, and he blocked the reauthorization process for over a year. So that the law actually expired. Pork packers continued to report on a voluntary basis, just as they were under mandatory. Most cattle packers did as well. But the problem with that is that when it came back in a year later, a little over a year later, we had to go through the rulemaking process all over again. And so it was really a waste of resources, and we didn't accomplish anything because there really wasn't anything wrong that was done. We got pricing mechanisms amazingly right. We set these up, kind of off the seat of our pants. We thought they were right. The only major change we've made in the pricing mechanism so far was to add negotiated formula hogs, and that was a flop. It just never represents enough trades to pass the confidentiality muster, which Dylan mentioned early in this session. The immediate problem when we started was the confidentiality criteria. They tried to apply the criteria that's used at NASS, and that's good for monthly and annual data, but it didn't work for daily data. And so right off the bat, we couldn't publish data. We came up with, I think, the 370-20 rule. I may have the numbers wrong, and that has served us well since then. The first substantive change was to include more sows. This happened in the second reauthorization, I believe. And we expanded the definition of a sow packer to include more sows in mandatory price reporting. I think we get about 50 or 60% of them now. We get no boars because there are only a couple of plants that kill boars. They never meet the confidential criteria, and I don't think they ever will. The big change came in 2010 reauthorization when we added pork. And Dylan talked in detail about how that was done. The reason, beef has been in since the beginning, since all the way back in 1999, wholesale beef. It was a deal killer for the hog side. And so we left it out. We thought, well, we're going to get the hog thing covered and we'll worry about that later. And then with consolidation of the buyers, the meat business, packers became more interested in this. And a major result was it provided the broad and dependable data for an estimated cutout value. And so we were basing a cutout value prior to 2013 on voluntary reported data. A very small portion of the wholesale prices were reported in the wholesale volume, and yet we were hanging a cutout value on it all the time. And I didn't think it was dependable, and most other observers didn't either. When we went to mandatory, we got a much larger percentage of the volume of products being traded and got a cutout value that we could really treat with some degree of confidence. Finally, let's go through a few problems in future direction. The biggest challenge for the pork pricing, hog pricing system is the significant decline in the number of negotiated prices and the volume of hogs traded through negotiated trades. It's just gone down. It's now consistently less than 1% every week. Negotiating hogs is a costly and time-consuming and inexact process. You may negotiate a price that doesn't end up being kind of representative, and your boss doesn't like that if it's on the low side. Okay, and if it's on the high side, your counterparty in the trade, his boss doesn't like it. So this is not an easy process to go through, and in fact, it's much more difficult now than it used to be. We used to haul them to the auction barn, and all the negotiating was done in an auction, or we'd haul them to a terminal market, and the commission agent handled all the negotiations. But now you got to do it yourself. And a lot of people said, I don't like doing that. I'd rather formulate them. And mandatory price reporting has been a victim of its own success. When you provide the industry dependable, trusted data, guess what? They use it. And it has led really to more hogs being priced through formulas, I think, because we have such good data. This brings up a real concern for me on the pork side. We've got much better data on pork now, and we've already seen growth of formula traded pork. Why? Because the data is good. And there aren't any easy solutions to this. This is a tragedy of the commons, where a public good is underproduced and overused. And you have to put some internalizations, the costs and benefits of those into the marketplace if you're going to solve it. It can be solved, but it's not easy. And it really has nothing to do with mandatory price reporting. Remember, MPR is a window to the marketplace. Initial lumping of swine and pork market formulas back in 1999 to make the swine pork market formula category is now a problem. Back then, there weren't very many hogs priced off the cutout, and we kind of threw the pork thing in because, well, it didn't fit anywhere else. So we threw it in with well, now, there's a pretty good chunk of them that are priced, at least in part, off the cutout value. And so, one of the proposed changes for the next reauthorization, if we ever get it done, is to break those apart because we think that again, mirrors the marketplace better than lumping them together. In this case, also, a real important criteria is that there's enough in both categories that each one on its own likely meet confidentiality criteria on a very regular basis. So we're not creating a monster that causes us to not get information. Finally, the broad-based cutout value is trusted enough to be used to settle the cutout value contract at the CME Group. We heard about that earlier today. One of the reasons that they could offer this cutout value contract is that they had a good set of data and a good set of valuations from which to compute a price index to use to settle the contract at its expiration. The CME Group really doesn't want anything to do with delivery of these contracts. And so cash settlement is important. And I don't think we would be there on the cutout value contract if we didn't have mandatory price reporting of pork begun in 2013 that has provided the data for those things. John, those are my observations. We probably got some questions. I'd be glad to try to respond to some of them. Sorry, Mr. John, I meant Jody. And so I'll pitch it back to you and let you ask a question or two if you'd like.
No, that's okay. Hey, Steve, I'll forgive you. I've been called worse. So, I really appreciate you taking the time to join us. And I know you're on the road. You mentioned you're in a hotel somewhere. So really appreciate you taking the time to go through and how kind of giving a little bit more backstory of how LMR started and your involvement. And one of the things that we hear often is, does LMR need to be changed to get more hogs traded through a negotiated sale? I know we've watched that over the 20 years, that percentage of negotiated hogs, which Kurt talked on last week, is down below 3%, sometimes below 2%. So
Yeah.
can you kind of expound on that a little bit?
Well, I don't think there are changes you can make in LMR to get more hogs negotiated, really, Jody. Again, let's remember what LMR is. It's a price reporting system. It's not a price determination. It's not a price discovery system. I don't think there are tweaks that you can do to this law that would cause more or less hogs to be negotiated. LMR, I will say, unwittingly, we all contributed, I think, to part of the demise of the negotiated hogs by providing such good data on the value of the animals that it could be used effectively to formulate. If your choice is to stop doing that, I don't think that's very smart either. Okay, so I think that the price discovery and price determination system that leads us to these prices and the mandatory price reporting system that tells us about these prices are really two different things. And we shouldn't start trying to manipulate or try to create some system for creating more negotiated by changing a price reporting system that, in my opinion, has been quite successful. So if you want to do something over there, then let's do something different. And there are some, there are not a lot of things you can do on this negotiated deal, because, if you look at the price data over the last 3 years, it's hard to go out and sell somebody on doing something that generally pays them less than otherwise. Okay. Why would they do it? The only time that wasn't true was April and May of this last year, when the negotiated price was a premium to the others. It's not that way very often. It's not that way very long. And so you have to change the system. And, I think that we could put in a system that collects funds, a small amount of funds from those who formulate price, and pays those who negotiate prices. It's not an easy one. It would require federal legislation, because you can't have free riders on it. You'd have to include everybody. It'd require a referendum. It'd be a new form of a checkoff, but we know how to run checkoffs. And if that's something that you think you got to have, a negotiated hog market, then we can do that. The alternative is to go to some system priced off the cutout value or cost of production or something like that. All of these things have their warts. All right. So you just got to choose which warts you can live with and which warts you can't. But in my opinion, don't mess with something that's good in mandatory price reporting.
Okay. Well, and the biggest thing, and you mentioned, is that 5-year sunset and that reauthorization. And and as we've mentioned in previous series, if you have questions or if you have concerns, or work with your representatives, your industry representatives, your senators, congressmen, your MPPC representatives within your states. We at USDA, we're just here to fulfill the law. We don't make the law. So please utilize them folks and to voice your concern. You mentioned, we're on this subject of volume. In 2010, we added the wholesale pork cuts, Steve, and I remember that. I thought that was a really good move for the pork industry. And as we've rolled, we've noticed that that volume, when you compare the volume to the total number of hogs slaughtered, and pork production appears to be a little bit on the low side at times. At what point, what do you contribute that to?
Well, number one is there is a large amount of wholesale pork cuts that are never sold as wholesale pork cuts. They're processed within the company that produces them, like Hormel or Smithfield or Tyson, or somebody that cures the bacon and slices it up, or or smokes the hams or pumps the loins and value adds those. So they're never traded as a wholesale cut in some cases. And so I was never surprised when we didn't even get 50% on that number, because there just aren't, a lot of them are in-house. And somebody says, well, then we ought to get a value on those. Well, a value of a green ham traded within Hormel and going into a Cure 81, and the value of that green ham is really irrelevant. They could put whatever number they wanted on it, and it doesn't change their profit and loss statement at the end of the day. All right. So it's the same as packer-owned hogs. The value of a packer-owned pig going through their own plant is irrelevant to the marketplace because it could be any number. And so I knew we would never get 100%. And it's the concern I have a little bit, Jody, is that it has been sliding slowly, really over the life of this program, which I would attribute that to the same thing that happened on the hog side, is that we have more and more dependable data, or people see more history of the data, and thus they can formulate products more effectively off of the animal, the cuts that are negotiated. So I'm still concerned about the volume long term, but I'm not concerned that it's less than 100% because I knew it never would be close.
Okay. Yeah. Well, I tell you, there is an awful lot of the pork carcass that goes into processed meats or
Sure is.
case ready.
Yep.
And so appreciate you highlighting that to a higher level. We forget about those Cure 81s and all that bacon that we see at the retail store.
That's right. That's right. Yeah.
So we're kind of getting close to our 12:30 time limit. So I have a few questions I would like to ask all of the speakers for today to join us on turn their cameras on, and we will kind of do around the horn with a few last questions. All right. Well, it looks like we have everybody. First off, I just want to thank the speakers for joining us, and really appreciate you taking the time out of your busy schedule to be part of this educational series. So real quick, just to kind of highlight on some of the questions that's come through the Q&A. I'm going to start real quick with one for Dylan. Where can I find past reports for historical data?
Yes, so if you're looking for an actual past report, the best place would be My Market News. And then if you're actually looking for data, Data Mart would be the best place to pull that out, where you can also download that into Excel. So those would be the two places to look for historical data.
Okay. The next question, I'd like to direct back to Dr. Meyer and asked if he could comment on the likelihood of the pork market being stripped out of the SPMF category in the next reauthorization, and comments on when that reauthorization may happen.
Let's start with the first one. On when it may happen, I don't have a clue. I mean, it was extended a year last September 2020. It ran right up to the expiration date this year and got extended to December 3rd as part of the reconciliation or continuing resolution or whatever the heck that was they passed a few weeks ago. So right now it's on the docket to actually expire again December 3rd. We think that will get taken care of. We think it's just going to be another extension, and my guess is they're probably going to put it to September 30th of next year. Okay, that's kind of become the magic date for reauthorizing MPR. I hope that's the case. I'm not worried about where we are now. I'd like to get started on some of these changes, but still, there's a whole lot of stuff. It's hard for me, given all the things that are on Congress's table right at the moment, that they can't appear to agree on. It's hard for me to say that this would be more important than those issues that are really important to our country. Okay, so I think we're okay. As far as the probability of getting that divided out, I think it's pretty good. The producers clearly are behind that. There's a number of packers that are supportive of it. There are a couple of packers that have not been supportive of it. I don't know if we'll move ahead with it without their support or not, but I think a lot of them are kind of coming around to say, you know, this is okay. Once the system is in place, creating another category in the report data that's come into USDA, I'm sorry, folks, I don't think it's just that hard. I mean, I think I could even figure out how to do that from a computer standpoint. So I think that's something that can be done. We've taken a look at it, and everything we know, there's enough volume on both of them. I don't think we're creating any confidentiality problems. And so I think that it's a pretty good likelihood we'll separate those two when we do the reauthorization. I would put the probability at better than 0.8.
Okay. Okay. Well, thank you for touching on that question. Real quick, one more question before we kind of wrap this thing up, and I'm going to direct this question to John. John, since your company deals in the analytics and the forecasting, where is there other areas that you can get market news information? And where is the best place to get information for analyzing supply and demand?
Well, I think, just from my perspective and how I do things is I use USDA, market news is the foundation for all the price reporting. And then you still have to kind of take, there's the other aspect of the market. It's not just not just looking at a price that's on a piece of paper that you downloaded. You still have to talk around to people in the market and talk about what's going on. I often say, well, prices taken off and gone sky high or whatever, and you can make a couple phone calls and find out was there some event that caused that. And I think that's the other part of it in terms of analysis. It's not just the price, the prices that you're pulling into a database and analyzing statistically. You have to think about, why did prices get to where they're at, and that's not, you don't get that out of the pure reporting. You get that through conversations and actually looking at the market. So I mean, there's sources, there's other sources besides USDA, but a lot of it, but those other sources also pull the USDA data into their price reporting. And I guess I go back and I think when I worked for the Helming Group back in the late 80s, and there was probably there was a couple different sources of price reporting on that company when I went to work there as director of research. And I said, I think we need to consolidate this and get everybody down on the same page using the same market reporting. And my suggestion was USDA at the time, and that was a long time before price reporting. So anyway.
All right. Well, thank you, John. Yes. So, we have some more questions, and I know we're up to the 12:30, but I sure hate to jump off here without answering some of these questions. I think it's very important that we try to address these so we can get them captured. This is an educational event. So with that being said, I'm going to direct this next question to Steve. And Steve, from your perspective, we have these specialty and these niche hog purchases. How, are we reflecting them to the best ability through LMR? And what's your opinion on that?
I don't think we reflect them very well at all, because most of them move through packers that aren't covered by livestock mandatory reporting. They move through small packers. The value of those is not reported anywhere. So I don't think we catch very many of those. Now, to the extent that some of them move through major packers, Berkshire-sired, open pen gestation, there's a lot of those hogs move through the major packers that are covered by NPR. Those are captured. They're captured in the other purchase arrangement category, where they have a non-carcass premium attached to their price. And so those are captured pretty well. But when we talk about, heritage breed, outdoor acorn fed pigs, I don't think there's a price of one of those. There's not one of those that move through a Tyson or a Smithfield plant, to be my guess. They move through smaller plants, and I don't think anybody knows what the value of those are. It's just on an individual deal. Now, with that said, my guess is there's some corner of the Facebook or the internet that those are probably talked about. I don't know where that is, but I would bet it's out there. We have this marvelous communication ability now. We can communicate about a whole bunch of inane stuff. Surely we're communicating about something important. So,
all right. Well, questions keep coming in, so let's go ahead and appreciate that response. And this question was directed towards you. I know that, with the reauthorization, reauthorization versus the SMPF with CME, if LMR is not reauthorized, then how's that going to impact CME and their contracts that are relying on the lean hog contract and the pork carcass contract on that rely on these LMR reports?
Yeah, it's a good question, Jody. So if LMR is not reauthorized, but the reports are still being published on a voluntary basis, and there is enough underlying data, we could still potentially, have contracts that would settle to those reports. Now, this is something, none of this is set in stone. It would very much be situational depending on, the data that we would get, and we would ultimately have to evaluate depending on the situation. But it is possible if there was still enough underlying data that was reported on a voluntary basis that we could settle futures contracts to those reports. Certainly, we hope that doesn't happen, but it is possible, and we would have to evaluate if and when that would come.
Okay.
And Jody, that's what happened when LMR lapsed back in 2005. The exchange went right along with their index. I think the other question that has to be asked here is, if you change the swine pork market formula to put it into two categories, then now Ann's definition of the lean hog index has changed. And what has happened in the past is CME has adapted their lean hog index to the report. I've said something a few times to an AMS person, well, that'll change the index. And the AMS person says, that's not my problem. That is the CME's problem. And so they can change that index definition as needed to still reflect what it has in the past. And they've done that before. They did that with negotiated formulas. They broke them out and include them in the formula, even though it hadn't been worth a hoot.
Okay. So yes, indeed, it will have an impact, and USDA, along with industry, will work with CME and move forward. So with that, I want to address a question that has come up on every one of our series so far this week, or these last 3 weeks, and it's centered around the Prop 12 implications. And I've asked Lakeisha Ayler with Livestock, Poultry, and Grain Market News to join us today to address that question and how Prop 12 will impact the live hogs and the cart and on the wholesale pork report. So Lakeisha, thank you for joining us again. For you that are joining us for the first time, Lakeisha was one of our first panelists at the very first series and did a broad overview of LMR and market news. So Lakeisha, could you please address the question about Prop 12?
Yeah, sure. No problem, Jody. I know we talked about this last week specifically as well. Obviously, it's at the forefront of everyone's minds. So as Steve kind of talked about before, hogs are highly prescriptive in statute. And based on where we are right now, we're going to apply the statute as is. So all the definitions and all of our reporting practices would just keep continuing on. So if there are any trades, well, all the trades would have to be reported. Okay, I should specify that first. Everything gets reported. You don't get to cherry pick and choose what you do or don't. But the trades that do come in, if there's a premium on the hog purchases that do come in, that premium is going to get reported on the LP 120 form, which then that information gets reported on the 250 report, which is the National Weekly Direct Swine Non-Carcass Merit Premium Report. Right now, we have other things coming in that are being reported, like group housing programs, loose sow housing, open pen gestation. However, those programs are reported as other in that category because there's just not enough regular activity or 3 companies or more on a regular basis in order to pass that on its own level. There's some confidentiality issues going on there, but it would be required to report it, and that's where it would show up right now. If that trade had a premium on, and then that purchase type would be another purchase arrangement because of that. As far as pork goes, pork is required to be reported regardless. What I already kind of specified is that this, if it has a premium, be seen as a specialty program. Therefore, that data that gets reported for that would be reported on the National Weekly Specialty Pork Report, also known as the 650 or the 651, depending if you're talking about the FOB plant or the FOB Omaha report. On that report, it's everything. There's no specific data line for very specific programs because it's, again, not able to have 3 companies on a regular basis to be able to split those out into different categories. So for right now, specialty programs includes, but is not limited to, open pen gestation, crate free, antibiotic free, no antibiotics ever, pre-priced and labeled, color graded, breed specific, quality graded, and organic. So, and reauthorization, I know Steve kind of talked about that as well. If there's changes that come out of that, those changes will be applied to our reporting practices then.
Okay, good deal. Well, I sure appreciate Lakeisha, you joining us again the last 2 weeks and to address that particular question, because it's definitely on the forefront of everyone's mind, along with the reauthorization. And so with that, I want to thank our speakers for this series. I want to thank today's speakers for taking time out of your busy schedules to join us and share your knowledge. We have a lot of knowledge on this panel today between John and Steve, and I really enjoyed hearing from you. And before I send it off and we go to the close, I want to hear one last word from John and Steve. I'm going to ask you both the same question. And if you could just briefly touch on this one question, what do you think has been the biggest change in the industry over your career? And I'll start with John.
Thanks. I get to think for a minute.
Yeah. Hey, that's not fair because Steve gets a minute. I would say if you take the combination, I was thinking about this, yesterday, is that the internet access and how we download data, and I think of how we do this now, compared to what we did, 30 years ago, and even when I was in DC, and how we got information and data, and now it's all click, and it downloads, or your office in the morning, it's already been downloaded, it's sitting on your computer. You don't even have to, it's not effortless by any means. And I don't know about Steve, but there's sometimes it seems like it creates more effort for me, but to me, that's the availability and the speed of information is probably the 2 things together that have made such a difference in this industry. And I always talk about structural change and all these production issues as well. The structural changes was the result of information and how that information is disseminated and the availability of it.
Okay. Yeah, so the technology is allowed for a lot more timely information, the transfer of that information.
Yeah.
I truly agree. Especially from a market news aspect, our motto is accurate or unbiased, accurate, timely market information. So it's definitely, the technology has allowed us to be a lot more timely. All right, Steve, I've given you some time to think about your questions or think about your response. So I'm going to let you respond now.
Well, the downside of going second is that the first guy might take your answer. And so sure enough, he did. Now I just want to point out that John borrowed all those books that are behind him. Okay. Those aren't really his books. But
hey,
I remember sitting in offices stacked with folders of livestock, meat, wool, market news, okay, and other publications. I mean, you know, Professor Grimes had his own library at Missouri, and it was unbelievable, all the paper. And so we've got millions of trees still alive because we've moved away from that stuff now. But that's been a major one. I'm gonna go one step further and say, what has been the thing that was the leverage point on the production industry, on the production side? And I'm gonna say the 1,000-head finishing, the 1,000-head fully slatted finishing barn. Now, a lot of that depends on technology and control and information, but that thing drove the structure. And when we figured out that we could keep animals more healthy by doing all in, all out production, fill that barn, empty it completely, put another group in it. When we further figured out that we could keep them more healthy by separating them away from each other and physically dispersing them so that you had single site production, it made a lot of difference to the production side of things, but it was a major driver of the structural shift to larger farms. And those buildings and what they can do are so much better than what most small farms could do, that it really drove a lot of the structural change that I've witnessed. And for good or for better or worse, that did it. I mean, we can argue both sides whether that was good, but I do know this: the consumer is the one that has benefited from it through lower cost pork. And so I would say that, since John stole my other answer.
All right. Well, good deal. Well, I sure appreciate both of your responses. As I've mentioned earlier to all the speakers, I really appreciate you joining us today. So with that, we're going to go ahead and close this thing out. We've gone way over our time, and I want to apologize for that. But however, I want to reiterate that we use these series as an educational series to educate you as a stakeholder in the industry, to help you learn about not only the history of where we come, but maybe where we could be going. And also so you can use that information to help you manage your risk. So I sure don't want to cut it short when we have questions coming in, that just so I can stay on time. So with that, I want to, like I said, a huge thank you to everyone. I truly hope this series has motivated you to start looking at these USDA reports and utilizing them to support your business operations, and with a wealth of information and some ideas to consider. All participants today will receive a follow-up email in your next couple of days with information on where to find the recordings and materials for these presentations. We'd appreciate it if you would take a few minutes and participate in our survey. We'll provide a link in the email where you can use or you can use your smartphone and hold it over the QR code in the upper left hand of this slide, and it will download that survey for you. We use the information from these surveys to help us provide useful information to our stakeholders. With that, this concludes this series. I hope everyone has a great week, a safe and blessed holiday season. Thank you for joining us.